Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you Tuesday, February the 21st. The year's 2024. Let's talk trading. Taking pips, part 2. These videos are for educational purposes only. Your results may differ from mine. And if you're wondering, Walmal's on vacation, so we'll see him or hear from him again next week. So, taking pips. We're, starting a new, let's see, where do I find one? We're starting a new M30 candle here. Now, depending on what method of entry you're using, you probably want to use the candle color, which way price has been heading or is heading. And then you look to the left, and what do you see here? Well, there was an outside bar, big candle, right? So it probably would call that a return bar. You see here, price returned to it, and price exceeded it. And the ditto for this high of this candle. Price exceeded it, and then dropped. So you have to decide, well, which way do I go? And when do I go that way? So, depending on your method, it's going to depend on which way you go. So, right now, if I was using horizontal lines, I'd be shorting the 25. So let's just see what happens. And you can see here, we've got a green H1, a green H4, and a green day, and a green week, but a red month. So there's the 25. Probably will push back up from there, but let's just see unless they decide to sweep it. So you can see right here, that's the previous M30 low. Now we covered M30, and what that means is the high of the current candles above the top of the previous candle, and the low of the current candles below the bottom. So we made that cover. So if you played that cover, that was about a 2-pip trade. So we've got the previous M30 low to deal with, we've got the daily open to deal with, and we've got the low of candle 2 to deal with. So there was the first trade. So now you may have been able to re-enter. So let's see if it cracks the daily open. Notice on the daily, we've only got 35 pips. Notice we're getting ready to come out of that upper wick zone right here. I've already been out of it once, or maybe more than once. Let's just see. What's that look like? Yeah. And we were looking at M30. So now we've broken the previous low. We've broken the daily open. And this is what this is the chart that Walmart likes to use. So right here we had a flip-flop box at 26.26. So that's where he would have taken it short. And you had indicator 2 on your side. Now notice that H4 open was right here at 26.23 area. It's like 23.5. The daily opens here at 26.21 area, 26.21.7. And we've got another flip-flop box. I don't know if he would have taken he would have probably already been in. He might be adding in right here. Approaching the 20. So now this is a new H4 this hour. We've only got 13 pip range. And so we'll just have to wait and see. Main thing here is you want to make sure price keeps closing below that daily open if you're going to go for the ride. So you might ask, okay, well, that was so far, it looks like this is profitable. Now, on the other side of the coin, you've got the previous M30 high right here. So if we were entering at 25, this is probably where we would have a stop somewhere either at the M30 or maybe 1 pip above the current daily high. So you're looking somewhere between, what, 9, 12 pips stop, which isn't bad. That's enough room. You don't want it too tight. So now we're getting closes below that daily open, below the M30, below the H4 open. So below 25, below H4, below the daily. So question is now, you just pretty much want to ride this if you haven't popped out. And so when would you exit? Well, we can look and see where would be a good place to exit. Possibly here. Because if you look from here, yeah, you have nothing but pushes up. Now, so it's like we've just about covered that candle. Notice how price bounced there. And you have to, remember, that wasn't a hairy hindsight. I said this would be a good place. I moved the cursor there and look what happened. And so you go, how do I know? Well, look, we had a push up, and then here, there wasn't any push down. It just moved up. So that means there must be a lot of people with orders sitting there. Some of them probably didn't get filled. And so look what's happening. So that low was at 16.5. Our entry was at 25. So that was about an 8 pip trade. So 8 pips isn't bad, considering a lot of times we're just going for 2. or 3, taking what the market gives us. Well, actually, we take what the market gives us an opportunity to take. The market's not going to give us anything other than opportunity. So if we were to look on a M1 chart, you can see here it's breaking out of a flip-flop box. And we're getting close to that daily open. But this particular bar is only 10 minutes old. This 30-minute bar or candle. So there's still a lot of time. I probably wouldn't take any long here, only because I'm below the daily open, and unless you're at an extreme, which I believe, meaning an ATR type extreme, that's when I would look to reverse. So it would have to be near, at or near, past the extreme. And you look at the current high. So it got pretty close, came back down, started breaking through previous highs for the day, coming on the downside. Those previous highs didn't support price. So right here, this would have been one opportunity to go short. That would be another opportunity to go short. Just like here, this open price, there was an opportunity if you wanted to go long against, in this case, the candle colors. And it's funny, most of my trouble and most of my losses have come when I've gone against the M30 candle color. You guys know from years ago, I used to always use the H1 as my guide. But then, in the past couple of years when I did the cover indicator, and I started seeing, just looking at these M30 charts, because I used to not like M30. I didn't like it in stocks, and I didn't like it in Forex. Well, in stocks, I started using it because since the market day is 6.5 hours long, you get, what is that, 13 candles. They're all the same size, but if you use hour candles, you get that one bastard candle. And it's just not conducive to statistics and anything. So that's why I shifted to M30. So then here in Forex, when I started to use the M30 chart or look at it, and I noticed how it seemed like these candles, would cover. So I ran the little frequency, wrote and ran a little frequency distribution, and I saw that there's a high probability that price would cover. And once again, I explained what cover was in the beginning. So price just likes to cover these M30s. So fellow traders, I hope you got an idea how to take pips there. And, the fastest 15 minutes trading sure goes by quick. I tell you, some days quicker than others, but, here we go. There we are once again. So always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.